All right, welcome everyone to today's segment on creative financing. Today I have Dominique Flipping. He's going to be sitting in with us. He is a loan officer with NFM Lending, and his office is located in Haddonfield, New Jersey. Later on, I will drop all his contact information down below, so you'll be able to reach out to him if you have any questions or want to, do anything further with him. But Dominique, I would like to thank you for taking the time to meet with me today. And myself, as a real estate professional in Gloucester County, I am committed to helping my clients, whether they're first-time home buyers, already homeowners, Caesars investors, or individuals just looking to build, a better real estate portfolio. Today, I am eager to discuss the different types of funding options available and how they can best serve our clients' unique needs, and how we both can work together to ensure they make informed decisions about their real estate ventures. So without further ado, Dominique, I'm going to turn everything over to you and let you give us your expertise in this area of finance.
Yeah, thank you. That was an awesome introduction. I should just bring you everywhere as I go. That was perfect.
Thank you.
Yeah, thank you so much. So my name is Dominique Flipping. I am a loan officer here at NFM Lending. Also do some other additional lending as well. But we're gonna keep this one kind of targeted on, some of the main topics that have been going on in our industry with the changes and how we can ultimately get, a lot more people buying their first homes. So to start off, to kind of take you from the beginning phase that I feel like, in our industry, a lot more of our clientele, we start right at that beginning phase on putting together the credit profile. So starting there, right, on what credit scores do we need? Because the lending process is relatively pretty simple. You need, pretty decent credit, which is at least over a 580 credit score. And then you want to have, employment. And that employment, you want to have at least 2 years worth of employment. And then for assets, right, you want to at least start to put aside some money. So a couple programs that most people are familiar with right now are FHA loans, VA loans, conventional loans. Those seem to be the big three that most people are going to be looking at, which, for FHA and VA, you can get at a 580. Ideally, you want to be at least at a 620 credit score. And the reason because is that New Jersey right now is giving away free money, essentially, right? So we have some grant programs available.
Yes.
So right now we have programs starting at $10,000 down towards your closing costs, all the way up to $17,000 in South Jersey. And then in North Jersey, it's even higher at $15,000 and $22,000 up to $22,000.
Cool.
So,
wow.
You want to be able to, if you can have an opportunity to get, some extra cash towards your down payment, why not?
Yes.
So most of the time, I always recommend my clients like, hey, listen, if you're relatively close to a 620, let's just get there and just put all the steps in place to get you there. The big change and why that's important is that now, as you know, right, like the buyers have to pay the commission now for the realtors.
Yes.
So that's been the biggest change, which, before earlier in the year, we're like, oh, all you need is a couple dollars to be able to buy a home. But now that's not the case. You do need some, extra cash. And typically most realtors are getting paid anywhere from, 2% to 3% of whatever that purchase price is. And in between, that gets rolled into the down payment. So the cool part is that, with me and you, right, a lot of times what we can do is still help them get that same benefit on low down payments with utilizing, offering a seller's concession.
Yes.
To try to get some of that rolled in there if possible. But the market is so competitive that that's not always the case. So I always recommend, seeing if you can save up a little bit more. So
Right.
most of the time, my approach is just going to be, hey, let's do the application. Let's just put together your worst case scenario on how much that you'll need to have saved up.
Right.
And helping them, kind of put that together. So that part has been, the bread and butter of most people. Most of us trying to save up to be able to purchase a home. Now, what I've been doing a lot lately is a lot of the clients that I've had have bought homes previously. So now we're looking at whether should I sell or should I do a refinance or, what in between would kind of help me out. And there's a few different things that we can do, right? We have a bridge program, essentially like the big thing that, right? When you're taking out someone who's selling a property and they're buying the next one, most of them have to make what's called a contingent offer,
Yes.
which isn't pretty
Can get sticky.
of an
Yes.
offer sometimes.
Yeah.
Yeah, because now they're relying on not only their transaction closing, they got to rely on someone else's transaction closing. So sometimes it's not always, sometimes it's a lot harder to get that offer accepted.
Mm-hmm.
So what we have is we have a bridge program that will allow them to make a non-contingent offer, which is huge in our industry. But not only that, a couple key things for this program is that they'll be able to access a portion of their equity up to $35,000 for home improvements, up to $50,000 for paying off any additional loans that need to be. That way they can qualify for a little bit more house, and we'll provide them with the down payment needed to make the next purchase. So it's a really awesome program where essentially, in theory, you can go under contract to buy your new home, move everything out of that house, be all settled into your new property, and then have you go ahead and go in there, list the property to get it sold. And then even if there were some things that needed to be updated, now they can get all the updates done where they're already out the house, because living in a rehab is a nightmare.
Yes.
So it's an awesome program to help them be able to make non-contingent offers, get their home updated to help it sell for more,
Right.
and allow you just to be able to do your job, find them the right house for them, and then they can go ahead and go that direction,
Right.
and move into the new home and sell the last one. Another strategy, we have some people who are looking to get started investing too, right?
Yes, that's right.
But they might be looking to do a combination of a few things. They might want to keep their home that's now their primary as an investment property, and then just go buy another property.
Yes.
Something bigger. Maybe their house, maybe they have kids and they just want to expand. Before they were rushing to buy this home, but now they want to be able to take their time to go to the next one. What I've been doing a lot lately is that some of the people that bought back in like COVID time, they have equity in the home. So what we've been doing is taking equity out of the home, doing debt consolidation, doing some home improvements, and then getting them pre-approved to go buy another home. But the cool part is with that is that they don't have to go buy a new home, but they can. So this way that gives them the luxury of both, of just staying there, or let's just go buy the next home. And what we're able to do is use the rental income that they would be getting for their primary home when they go move out,
Right.
to offset that payment. So they're able to sometimes qualify for even more than what they had before.
Right.
Now that we've done a debt consolidation,
It's like a win-win. Yeah.
Yeah, it's a win-win. And then now they've got one property rented out. Now they've got this home that's essentially paying for this mortgage, plus now paying for a portion of the new one. So now you can get a bigger home and pay less in bills.
There you go. Yeah.
It's like a win-win across the board. So
back to the American dream.
Yeah. You are not lying about that. So, yeah. So that's a good strategy that I've been implementing a lot lately. There's a few other programs that I wanted to go over to. One which we just closed this year, was the bank statement loan for our self-employed borrower.
Yes.
Right. So when we started that conversation off, like, hey, he's having trouble getting pre-approved and his tax returns, and a lot of the self-employed clients don't realize that there's a lot more options than just using the traditional route of just the tax returns. So the key part on that one is, listen, predominantly everyone that's self-employed just about writes off all their income, right?
Yes.
Myself included. Not gonna lie, it looks like I live in a cardboard box if you look at my tax returns. I don't want to pay Uncle Sam, but I'm expanding the business and I want to dump more back in, and I'm going to take the write-off.
Yeah.
So there's bank statement loans that can allow the self-employed borrower to be able to buy and still be able to have all the write-offs and the benefits of being self-employed, rather than claiming a bunch of income on their taxes just for the sake of being able to buy their next home. That loan proven that we can take someone who's self-employed with no money on their tax returns, just use their bank statements and help them go buy a home for the next family.
Yeah.
So
Yeah, that was good. I was very excited about that transaction that we
Yeah,
did. It really opened my eyes up. I was like, wow, this is really good. And he wound up getting a house in a very, very good neighborhood. And he was extremely, extremely pleased with the way everything went. So I was really good with that. Yeah, that was good.
yeah.
Yeah,
That was a really good one for us here.
yeah,
And kind of, really stemming off of that creative part, right? We have a lot of investors that, might not know about using DSCR loans and how creative that we can be with those loans,
yes.
kind of stemming off of self-employment. And, the DSCR loans are really good. And we've been able to do some of those here recently. DSCR or debt servicing loans, essentially, this is really geared towards those investors who want to buy the property, whether it has a tenant in there at the time of closing or not has a tenant there at time of closing.
Mm-hmm.
We could do both. We could use either the lease that's already existing or we can go off of market value, but it allows them to be able to go buy a property without having any pay stubs, any tax returns. So as long as the property will cash flow,
Right,
and they've got between 20 to 25% down,
right.
we could do the deal.
Wow.
It's a great
Yeah,
product for a lot of
yeah,
people, and this
that
is
sounds
good
good.
even for a lot of our clients that are older, might be on Social Security, but they're like, man, I did not set myself up right for retirement,
Yeah,
and
yeah,
I want to be able to start to bring in some extra money. What options do I have? Because on paper, I don't really make much money. Well,
right.
maybe we might want to explore tapping into the equity to then use that as the down payment to go get you, some more properties. Or maybe you have money in your 401k, but it's not producing, the amount of money that you would like it to do.
Mm-hmm.
We can use that money to then, get you a rental property that's, maybe cash flowing an extra $500,
Right.
and you might be able to get 2 or 3, right? An extra $1,500 a month.
Yeah.
It could be a big amount for somebody,
And you
and
said
they can
that's the
cash.
DSCR, debt servicing loans?
Yep, debt
Okay.
servicing loans. So those are what's considered to be non-QM products. So basically, we don't need just about nothing. As long as you got the money for the down payment, property makes sense.
Okay. So
We
now
can
with
get it
this,
knocked
do you
out.
have to have a property already? Maybe I missed that. I'm not sure. Do you?
That's a good question.
Mhm,
No, you don't necessarily have to have a property. You will have to eventually find the property,
mhm,
but we don't necessarily have you. When it comes to the pre-approval for
mhm.
those, like we talk about how do you get pre-approved for them, it just comes to how much money you have for a down payment.
Okay.
Because we don't need it's not like, oh, my income looks like this. It doesn't, we don't care about the income. We don't need it. Just a matter of how much money do you have in the bank. And as long as you have enough for 20% down and, you have at least over a 660 credit score,
Hmm.
technically you can go down to a 620. I just don't recommend it. The pricing isn't as good. But 660 and above is kind of that sweet spot
There you go.
for those type of loans.
Okay. Cool. Nice. I will definitely keep that. That's a good one. Yeah. Hmm.
Yeah, those are really good,
Okay.
and so that's kind of like a broad overview of a few things, and
Right.
then we can keep expanding too. I do like in this market as well, kind of bringing in those rehab loans. So kind of how those will look, and that could be for a first-time investor. I mean, a first-time home buyer, right? In the market now, everyone's always competing for the move-in ready home, right? So
Yes.
there is like a really small pond of these move-in ready homes, and
Hmm.
there is just everybody fishing in the same
Yes.
pond,
Yes.
right? But there's another pond over here where it's more so like it's maybe in the area that you want it to be, but I mean, it's got wallpaper, it's got paneling, it's
Hmm.
missing windows, and you're like, what in the world? I can't move.
Yeah.
So if you have a pretty good eye to see something that what it could be, now is a great time to really use the 203K loans,
Okay.
where you can essentially still do the first time home buyers loan, where you only have to put down 3.5% down
Hmm.
plus closing costs. But now you can go buy a house, totally get it renovated, right? Update the roof, the HVAC, as long as whatever you're purchasing it for and the value
Uh-huh.
will match, right? Like you're not going past value with the rehab. As long as that can meet, you can buy a house. And the cool part is you compete really well with a lot of people, right? The people buying these homes are investors. So you cut out the middleman.
Yes.
And on top of that, because there's no grants available for this, if you do have the capital to pull it off, it's only a small amount of people that can do this because, most people might not have all the money needed for a down payment, which is why they have to use a grant.
Right.
So now it allows you to compete with people in your space that it's much smaller, which can help a lot of people get a lot more offers accepted.
Definitely.
So it's a cool product.
Right.
To
Now,
explore for those first time home buyers.
Now with this, with the what was I getting ready to say? With the rehab loan, okay, you can combine it with first time home buyer. Is there a minimum dollar amount for repairs that need to be made?
Not necessarily. That's a really good question. It's not necessarily like a minimum. Like, as long as the value would be there, you'd want it to make sense because it is a little bit more documents. And depending on how big of a rehab it would be, could cost more to get like an additional inspector out there. So as long as it makes sense, it'll be fine. But technically speaking, no. Like if it just was something that maybe needed some doors and some paint and some carpet to make it move in ready, you can do that. Maybe spend $5,000 on it.
Here we go, because I'm running into this, quite often now, because a lot of the older homes that are sitting on the market now, basically because it's a generational home and the younger generation doesn't want to live there anymore. They're doing their own thing. Okay, so grandma's house was built in 1950, 1960, but it has septic. Is that considered in the 203K or no?
Yeah,
it is.
Yeah, you can get just about anything done in that 203K. That's a good question. You can get anything done just about in that 203K loan.
Okay.
Like let's just say like you get a budget to give you like a kind of a small overview of it. Like you'll get like a budget, of the value and the purchase price. So let's just say you have to take care of all the things that have to be fixed, right? Like you have to have windows, you have to have doors, you have to have a septic, right? That's working. So all those things have to be done, but you also can get what's called a wish list. So say you still have enough value, right? Instead of just getting a standard tub, you can get a jacuzzi tub if you wanted to, right? As long as it can meet inside that budget, you can be able to make that happen. But yeah, especially some of those older homes that have been sitting out there, especially the septic ones, because again, like one of those things that we talked about, fishing in that other pond that there's not as many fisher, men in there or women. You can go in there and say, because some of the people shy away from septic because they don't want to deal with it.
Exactly.
But you might be able to go say, you know what, I can buy this property. It has enough value where I can just replace the entire system. I don't have to worry about nothing. Or see what it would cost to get it swapped over. But now you can roll that in and get it at a really good discount.
Cool. That's good. That's good stuff. Awesome. All right. We got some good information here on some financing, creative financing out there available to multiple areas of people, that are looking to delve into real estate or out there, like you said, trying to fish. Everybody's trying to fish in this small pond over here. And we got this other pond there. They might be just as eligible to go over into with some of this the financing options that you just gave us. So that's great information. Anything else?
Yeah, I guess the main thing too, there's just a lot of different programs. I think that what the best thing for most people to do is if just kind of spell out what you're looking to do. Like I've got access to fix and flip loans to help people get started, fixing and flipping properties. We've got so many options. I think the big thing is just whether you've got really good credit now or whether you have money. Let's just have the conversation now and help you put together that plan. To map things out, and me and you tag teaming up, and we'll get them to the table.
Most definitely. And then also with the loans, you also have a credit program that you would be able to offer.
Yeah, so we've got a few different businesses behind us. We've basically built a system that can almost essentially take anybody that has a pulse and be able to get them to get to the table, basically, right? So how people come to us and we blend everything together, right? I've got a credit repair company. I've got an insurance company. We do, regular residential mortgages, but we also do some hard money lending as well. So, kind of like we have like the blueprint essentially, if you come to us, you've got bad credit, we can either A, give you advice or help you fix it.
Right.
Once the credit is where we need it to be, you say, hey, you know what? I'm still at the beginning phase of, trying to put together my down payment. We'll bring in our Series 7 and 66 licensing and help you create a budget plan to help you, come up with a plan that will help you, really maximize your cash flow each month. And we'll do a free budget plan together. And then we can put together like a realistic goal on like, hey, listen, at the end of each month, you should have $1,000 if you stop going and buying DoorDash every month, right? So we'll work with you and then put together a plan that will allow us to say, all right, if we do this, you'll be pre-approved in exactly 8 months to the T. And then you follow that plan. We touch base with you, monthly or quarterly. And, we help you make sure that you get the down payment set up. If you want to be an investor, but you're like, I've got good credit now, right? Let's just say all the credit is now fixed, but you're an investor and you want to buy, start fixing and flipping properties. We have the ability to help you get business funding, which will allow you to use it as gap funding, where essentially you can flip a house without coming out of pocket with little to none of your money. And so typically around a 680, 700 credit score, we're able to get those clients 50 to 80,000. So we've built the blueprint to be able to get people to buy a house with like little to no of your money out of pocket. So anything people are looking to do, we've built the system and have the team to get them there.
That's good because there's so many different situations out there, and it's great that you got something for everybody. So pretty much just bring your issue to the table, and Dominique's got an answer for you. Work it out. Work it out. Look, don't let credit hold you back. Everybody's been in that boat one time or another. It's nothing to be embarrassed about or anything to stop you from getting to your dream, getting to your goal. So come together as a team. Let us all work together. And watch your American dream come to life, come to reality. So
I love it.
So if you don't have anything else at this time, we'll definitely get back together again and go over some other things, at a later date. But if you have anything else you want to offer out.
I think that would be it. Let's let's maybe set up like another one where we can go in depth. We kind of do like a high overview of, all the options that people have. Let's maybe do something where we go really in depth on one of the topics and, help people kind of lay out that blueprint.
That sounds great. It sounds great. So again, I just want to thank you for taking the time, Dominique, to discuss all these different options you have with us for financing and real estate. And it's clear that whether you're a first-time home buyer, you're already a home buyer, experienced, or already a homeowner, an investor, or someone looking to get into real estate, there is a tailored solution out there for you. And Dominique definitely can help you on your path. All right. So again, I will drop all of his information and a link below in the description. And please feel free to reach out to him or reach out to myself, and we can get the ball rolling for you. All right. So until next time, thank you so much. And we will. Are you still there?
Yeah.
Did I hang up? Oh, okay. My screen just went blank. I don't know what happened here.
There
we go. Okay. And until next time, everybody take care. All right.
All right. Thanks, Tony.
Thanks, Dominique.